It's not a great omen for next week's climate talks in Paris that Britain's chosen today to slash subsidies for carbon reduction, scrap the £1 billion support for carbon capture and storage, and exempt the heaviest industries from environmental tariffs. A binding deal was already going to be hard to secure in Paris, with the US wary of anything which would need support from a Congress which remains in denial. Mentioning global warming at any investment conference brings out plenty of sceptics in the investment community who share the view of most of the Republican primary contestants. That is, that the whole thing's a scam cooked up by left-wingers. Yet even these investors who reject the scientific consensus should be paying attention to what's going on with the climate. That's not because of rising sea levels, although anyone with a very long investment horizon might want to avoid investing in low-lying city property. It's not because of worsening natural disasters or damage to farmland either, although those who invest in catastrophe bonds really should be concerned. The real reason that investors need to pay attention to the climate is simply that so many others are beginning to do so. They're screening out the biggest carbon emitters or pressing for change at companies they hold. This week, insurer Allianz said that it was going to sell €225 million of shares and run off €3.9 billion of bonds in big coal producers and power generators as part of a wave of investors imposing environmental filters. The price of coal, that's the red line here, adjusted for inflation, has collapsed recently, something that environmentalists have tended to be delighted about. But the blue line suggests that they should be a little bit less smug. While the price has collapsed thanks to weaker Chinese economy and the opening of new mines, the production shown by this blue line is only very, very slightly down from its recent record highs. It is, of course, the amount of coal dug up and burnt which matters to the environment, not the price. Still, there are a couple of decent reasons why an investor might reasonably worry about exposure to carbon-intensive companies. First of all, it leaves them exposed to the risk that politicians will finally take serious action, no matter how unlikely that may seem at the moment. That's a risk that anyone exposed to high-carbon companies is automatically running. There is some slight recent evidence that companies which cut the amount of carbon emissions they produce per unit of sales have outperformed. As you can see on this chart from BlackRock, it divides up companies into the quintiles, that is the groups of 1/5 each, that have done the most and the least to improve in terms of carbon, so reducing carbon. These guys at the top have clearly outperformed the wider market over the past couple of years. But there's not a lot of evidence that this has worked over a longer period. And of course, the companies that are most likely to improve are those which are the worst at the moment. So this isn't necessarily an argument for buying companies which have already made the effort. Quite the opposite. Maybe you should be buying those which are currently the worst. Secondly, holding smokestack industries makes you a target for the green lobby. Pension funds, insurers and big brands keen to protect their public image. It's this second risk that's really the most important. The more institutions that join the divestment campaign, the more damage will be done to shares in coal miners, oil companies and power generators. Other investors should be paying attention, not because they want to do their bit for the climate, but because they want to sell before the price falls. Smart investors shouldn't just try to get out early. They should also prepare to get back in, mad as that might sound. If institutional selling drives the price down enough to create a significant carbon risk premium, it'll be a great buying opportunity. You'll be rewarded for holding those big polluters. After all, as British Chancellor George Osborne managed to demonstrate today, when the going gets tough, politicians will usually choose industry over the environment. So that means staying out of coal miners for the moment, but being ready to buy back in when prices get really distressed.